should start a pizza joint called Strazza Pizza.
I would love to open up a pizza parlor down here.
What's happening, everybody? Once again, it's your boys, Steve Strazza, Sean McLaughlin. 2 days in a row. Day 2 of my nose looking hideous on camera. Hopefully we can get past that.
I like the Band-Aid look, though. You're like Nelly.
I'm just going to start going around telling people I got punched in the nose. I was in a fight. You should see the other guy. You know, that whole line. Anyway, by next week, we'll be good. Anyway, that's not why you're here. You're here because this is the options trade of the week. Normally, JC joins me on these calls, but JC's busy. I don't know what the hell he's doing. He's not busy.
A lot of meetings this afternoon.
He's playing hooky. He's playing hooky.
Yeah.
I love that you protect him. All right. I throw him under the bus. You protect him. Good job. I see where the priorities are. All right. So this is the options trade of the week, like I said. And this week, we had a lot of good trades to choose from during our meeting today. Me and Strazza and JC and the team, we were kicking around a bunch of ideas. I joked during the meeting that we had a first-class problem. We had too many good trades to pick from, but we landed on playing this big base, the emergence from this big base in the biotech space. Strazza, why don't you walk us through what you're seeing here in these next two charts? This is the longer-term chart of IBB.
Yeah, so, where price is right now, and it's been coiling, just kind of moving sideways at the upper bounds of this range. If you zoom all the way out on the chart, we're looking at a weekly chart here. The highs from 2015 is exactly where this base has been forming for a year now, right? So you have the breakout level of the base, you have the 2015 highs. I really like this 135 level. If we zoom in on the chart, look at the daily.
Let me zoom in here for you. Sorry, my fault. There we go.
That's what it looks like if we were to zoom in on that base. So above 135, I think, the squeeze is on. This is a valid reversal pattern, if we break out above this level. And I really like, going out to January of next year because it really gives us time, right? This doesn't have to resolve higher tomorrow. And then it gives it time to run and kind of enjoy that nice leg up, bullish reaction to this pattern resolution.
Well, I like what you said there about we don't need this thing to run tomorrow. And that's important because one of the problems that we are having is that a lot of the stocks that we have liked for the past 2, 3, 4 weeks, a lot of them have already had some serious runs. And we would feel kind of weird about chasing some of these names right now. So that's number one. So we don't need to be worried so much about the timing on this trade because we bought options a year from now that expire a year from now. So that's important. Number two, a big reason why we were afforded the ability to go so far out in time is I'm going to bring up the next chart here. This is the implied volatility that's being priced into the options of IBB right now. This is the entire past year for IBB, and you can notice that down here, up in the bottom right here, this is the lowest implied volatility has been all year for IBB. And basically, in layman's terms, what that means is this is the cheapest that options have been priced all year in relative terms, right? So when options are very cheap, the cheapest they've been all year, those are the kinds of times when we want to be buyers of calls or puts if we were bearish, and we want to go out in the furthest duration that we think makes sense because it's so cheap that we can afford to pay up a little bit for more time. And that gives us much better opportunity to profit. And we bought, I don't have it on here. I don't have a chart for it, but we bought the 165 calls. So on this chart here, it would kind of correspond basically just below the previous cycle highs here. The previous cycle highs is about 175 that we hit at the end of 2021. And so we bought the 165 strike. Now, do we think that these calls are going to get to 165 next month, next week? No, of course not. But because we have a year for this to work out, and because we've bought more than one contract, we're going to do what we always do, Strazza, when we buy long calls, is we're going to look to sell half of them when we can sell for a double. And I think that the stock's at 135, 136 right now. If this thing even just gets to 145 over the next 6 to 8 weeks, that's probably gives us the opportunity we need to at least take our risk off the table in half of our position and then let the rest ride. So I don't want to call this a low probability bet, Strazza, because we have so much time working in our favor. But I think it's a high probability that we'll be able to at least take our risk off the table if this thing starts moving. And then we could sit back and kind of relax and let the thing play out.
And I really like what we did here, right? Because we came into the analyst call this morning. You were looking to sell premium. And then we looked at area after area after area. And, you know, premium there wasn't enough there, right? Everything was really cheap. So then we kind of flipped that idea on its head, started looking for long ideas. But a lot of areas are stretched right now. Go back to the daily chart. A lot of, you know, the strongest groups are really, they've had a nice run the past few weeks and they need to cool off. That's not the case for biotech. So we have super low premium, the lowest of the year. Like you said, the options are as cheap as they get in this right now. And this thing's not extended like a lot of other areas are. So
there you go. So that's our trade of the week this week. We're going to keep it short and simple. We're long the January IBB 165 strike calls. We paid $450 for them. I believe they're still trading around that price right now, last I looked. And this is a longer term play. Oh, and maybe we should highlight, it's kind of, I wish I had the price axis here on the right side of this chart. Not sure why it's not there, but 130 is the level that we're leaning against for risk management. So kind of corresponds with the low right in here. If we somehow lose 130 in IBB, that's our signal that we're either early or wrong. Either way, I don't want to be either of those. And so I'll close the position down and salvage whatever's left in the premium. Hopefully there'll still be plenty of premium left, so it's not a total loss, which I don't think it would be. But that's the plan. Below 130, we're out. Above 130, we're going to let it ride.